Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hi, yes, good evening. I want to order one pizza. Okay, let me tell you properly. Listen, okay. 3 pieces of that should be like very spicy. 1 piece can be like a little bit less spicy. One can be like cheese, completely loaded with cheese. One can be full of mushrooms. One can be like capsicum, tomatoes, and onions. That's it. Hey folks, CA Rachana Ranade here and I welcome you all to a very interesting video. By the way, समझदार को इशारा काफ़ी. This one tells what's in my portfolio. So basically, when I was ordering the pizza was composed as per my choice. Similarly, my portfolio will be composed or designed as per my risk-taking appetite. So in this video, we are going to discuss how to decide what should be there in your portfolio. I am for the first time going to reveal how does my portfolio look like. So if you want to know all the answers to these questions, just keep on watching the video till the end. You might be wondering why is Rachana making this video in the mid of 2022 and why not in the beginning of 2022? You know, last 6 months there have been a lot of macroeconomic changes like our devil of inflation that is actually killing our investments. Now, if you want to know how much inflation has happened in the last 6 months, just have a look at this data. If you can see in the last 6 months, the inflation has shot up from 4.91 to 7.79. It's one of the highest in the last 4 to 5 years. So, if this be so, there is a great chance that many of your assets might not be generating a real return. Now, what's a real return? I'll give you a simple example. Coming back to our inflation figure of 7.79%, and how much is your FD fetching you? That's it. So in that case, you will be having the red part that you can see, that is your negative return. In simple words, FD as an asset class is not fetching you a real return. Simple. Now let us go to multiple asset classes which are there in my portfolio and let us try and check whether they are able to beat inflation or not, whether they are able to generate a real return or not. Have a look at this. So if you see here, FD, RD, yes, they are very much there in my portfolio, but the intention is for safety and not to generate returns out of that. They are a part of my emergency fund. Second one is real estate, more of REITs in my portfolio, and that too are typically generating around 5% in the last 1 or 2 years. So again, not beating inflation. Third one is gold, shade above the inflation figure is what you can see. Bonds, somewhere around 9 to 11%. So till now, bonds is the highest which has been able to beat the inflation till now. Of course, there are certain tax-free bonds which will fetch you barely 5%. In that case, it might not generate a real return. Next one in my portfolio are mutual funds, typically more of index funds is what I have. So 12%, again able to beat inflation. Next one is of course equities in my portfolio generating around 15 to 20%. Again able to beat inflation, and with this I'm sure you are like, ye dil mange more. There are some asset classes which Rachana you have not discussed. Yet. I'm going to discuss about that in the coming few parts of the video. Well, now that you have understood that what all asset classes are there in my portfolio, now the next step is that you should also know how much percentage allocation have I given for each asset class. But if you want to know how much is the percentage allocation, before that you need to understand something known as risk return pyramid. So basically this is a pyramid which is based on 2 parameters. Very simple, one is risk and the other one is return. At the lowest, that is the base of the pyramid, all asset class which have lowest risk and probable lowest returns will fit into the lowest part of the pyramid. As we progress to the higher parts of the pyramid, the topmost part or the summit will be comprising of all those asset classes which can have the highest risk and which have a probability of generating the highest returns. Simple. So whatever asset classes are there in my portfolio, where do they fit? I'll quickly tell you all about that. The very first one, that is the base of the pyramid, asset classes that I have, FD, RD, I have something like a PPF, NPS, I also have postal FDs by the way. We can also make an FD in Indian Post, right? Then I also have some government bonds and some cash and cash equivalents. So all those will go into what? Into the base of the pyramid. Moving ahead to the middle part of the pyramid, I do have real estates and REITs in my portfolio. Equity mutual funds will also form into the middle part of the pyramid. So in simple words, middle part is something where the risk is a little bit higher as compared to the base, and probable returns, potential returns are also a bit higher. Third one, large cap stocks and mid cap stocks also form part in the middle part of the pyramid, and also I have corporate bonds. Oh, by the way, I also have some government bonds, something like RBI bonds, which will form into the base of the pyramid, but corporate bonds will go into the middle part of the pyramid. Okay. Moving on to the summit, that is the final part of the pyramid. Of course, small cap stocks which I have in my portfolio will go into the summit or the topmost part of the pyramid. I do have certain futures and options. Of course, they are not like a portfolio part, because generally you trade in futures and options. You don't invest in futures and options, but they'll go into the summit part, right? Third, I have also invested in unlisted shares that will also go into the high risk, high return category. I also invest in invoices, something like bill discounting, which will go into the topmost part of the pyramid. Something known as collectibles, example can be like paintings. I don't have it in my portfolio, but that will also go into the topmost part of the pyramid. Wait, one asset class here still, you are wanting to know that, you're wanting to hear that from me, and what is that? Crypto. Well, that also forms part at the summit of the pyramid, because it's a potential high return but simultaneously a high risk category asset class. Well, by now you have understood what all asset classes are there in my portfolio. I have also talked about the risk return pyramid. But then the big question is that what is my risk appetite? That is also very important. So am I a risk averse person? Am I a medium risk taker? Am I a high risk taker? Because if you know your risk profile, then you will be in a better position to choose your own asset allocation. So how do I check out my own risk? So for that, I'm just taking you to a website. I've also pinned the comment of that website in the description box. So I'm just going to answer a few questions. So once you fill in all these details, they will also give you a summary of this, and I just click on evaluate now. So once I click on evaluate now, I get my risk quotient, and this very clearly mentions that I am a high risk investor. So I'm giving you a homework. Everyone has to check out what is your risk profile, because based on your risk profile, I'm going to tell you what could be a good asset allocation in the immediate next section of the video. So now that you have understood how to calculate your risk profile, based on that, there are three categories of investors. The very first one is a risk averse investor, the second one is a moderate risk investor, and the third one is an aggressive investor. Now based on these three investing profiles, I am now going to discuss what could be a probable asset allocation. Things to remember before we go on to this asset allocation. Number one, there is no formula which is given in any textbook that, okay, this should be your asset allocation based on your risk profile. Number two, there is no law which tells that this should be your asset allocation. So what have I done? I have referred to many websites, many books, and based on that, I have taken out my own calculation, which will give you a guideline as to what could be your probable asset allocation. If you differ with me, you can surely change the percentage which I am telling you, right? So first, moving on with the risk averse person. Here you can see, because we are talking about a very low risk taker, ideally 45%, up to 45% can go into very low risk category of assets, something like FD or RD. Gold up to 15%, real estate or REITs up to 7%, bonds which can include a mix of corporate bonds or government bonds up to 6%, mutual funds which should ideally typically include only index funds could go up to 15%, equity ideally again large caps up to 11%, and crypto up to 1%. Now you might be like a risk averse person, still up to 1% you are saying, Rachana. So I'll tell you the logic behind this also. Finally, we all are human beings, right? And when the crypto markets start going up, people are like, I should have invested at least a small amount. In such a case, I would want to give you a numerical to tell my point in a much clearer way, right? So assume that there is a person who can invest 10,000 rupees in 1 month. Every month, that person can invest 10,000. Now I'm saying up to 1%. So 10,000 ka 1% is what? 100 rupees. 100 rupees in such scenario may be allocated to cryptos. So why are we saying up to 100? Why? Because 1%, because this is a high risk, high return category of asset. Even though if the market is volatile, ideally you should not lose sleep over 100 rupees invested, right? But this will give you an opportunity to test new waters, right? Now the big question is, can I invest with as low as 100 rupees? And answer is yes. With the CoinSwitch Kuber app, you can start your investment journey in crypto with as low as 100 rupees. Moving on to the next one, which is a moderate risk taker. Here I've changed the allocation a little bit, up to 30% in FDRD, up to 13% in gold, up to 9% in real estate REITs, up to 8% in bonds, up to 16% in mutual funds, up to 20% in equities. Here, because we are talking about a moderate risk taker, here some small caps and mid caps can also form part of the equity segment. And if I'm talking about cryptos, it could go up to 4%. Okay. Moving on to the final category, aggressive investor. So that's my portfolio allocation for you. Of course, as I mentioned, it could be plus or minus a little bit percentage, right? FDRD up to 12%, gold up to 7%, real estate or REITs up to 10%, bonds up to 9%, mutual fund up to 17%, equities. For me, equities and equity-oriented mutual fund has to be the highest, right? The next one, up to 10% for crypto. Now, you might ask, Rachana, don't you think up to 10% is like aggressive? Number one, I'm saying up to 10%. Number two, now there isn't any fourth category. So, for example, I and Shah Rukh Khan, we all will fall in the same category. Okay, so maybe I may say I will invest up to 5%. Shah Rukh Khan says for me, maybe up to 10% will not also make any will not be a problem, right? So I hope you have understood this point as to how you can start your investment journey with as small as 100 rupees. Number one. Number two, you have also understood how can be the asset allocation based on different risk profiles. Well, now that you are super excited because now you know that you can start your crypto investment journey with as low as 100 rupees, the next big question that pops up in your mind is that how do I get the requisite knowledge about investing in cryptos? So for that, answer is very simple. You can either go to the website of CoinSwitch Kuber, or they also have a very nice YouTube channel on which they have a lot of data put in for various topics about cryptos. If you want, you can also check out my YouTube channel for that, right? Now you have understood from where to get knowledge. Now you start analyzing all the different cryptos. And just for your understanding, have a look at this chart. These are the number of cryptos that have increased over the period of years from 2013 to 2022. And right now there are just more than 10,000 crypto tokens in existence. Amazing. Now in this scenario, do you feel that you will be able to do 100% thorough research of all the cryptos? Answer is ideally no. Number two, if you want to gauge a direction of the overall crypto market, if you want to gauge a direction that is it going up, is it going down, can you do that by checking out all 10,000 cryptos? Answer is again no. Wouldn't it have been great that if you were given a crypto index which tracks the overall market of cryptos in India and which gives you a sense about overall is the Indian crypto market up or is it down? And you know what? This problem has been solved by CoinSwitch Kuber as they have introduced Create, which is India's first rupee-based crypto index. And this index helps us to understand where are Indians investing. So basically, the index value of Create will go up or down as and how the components of this Create index will go up or down. By the way, you might be like, what is that Create ka 8? 8 is nothing but the 8 either tokens or coins which are a part of this entire index, right? Now, as I told you that as the prices will go up and down, the index will go up and down. But how are these prices? Why do these prices move up and down? So for that, there could be multiple factors, right? It could be something like Indian demand and supply. It could be even an impact of the global prices. It could be something like INR exchange rate as well, which could impact the prices. So there could be multiple factors for that. Now, all these trades, whatever trades take place on CoinSwitch Kuber's platform, the prices are sourced from all the real trades, right? In addition to that, if you want to know about how is this Create index calculated, for that you can check. It is based on the market capitalization of all these 8 constituents. It's a pretty difficult way to calculate that. If you want, you can pause the video, see how it is calculated. But is it really required? Do you need to calculate that? Answer is no. The value is directly given on their app and it will directly show whether it is up or whether it is down. Next question that you have in your mind is that which are these 8 constituents, and for that here is the answer in front of you. It involves or it includes Cardano, Binance Coin, Bitcoin, Dogecoin, Polkadot, Ethereum, Solana and Ripple. Of course, you can see the actual names like something like ADA, BNB, BTC. Also, you can definitely read out from the screen, right? One more question. I know I'm reading your mind a lot because I know what all questions you have in your mind. I'm just keeping on answering those, right? So, the next question you might have in your mind is that all these 8 names, are they going to remain same throughout the lifetime? Answer is no. Okay. Number one, if I'm talking about rebalancing, the rebalancing will be done on a monthly basis. Means what? Whatever is the weightage given to these 8 constituents, the weightage can change on a monthly basis. It will be reviewed and it may change on a monthly basis. But will the constituents change on a monthly basis? Answer is no. Okay, so these 8 constituents that you can see on the screen, they will be changed or they will be reviewed, and if required, they can be changed on a quarterly basis. Okay, so after 1 quarter, let us say 1 out of these token can go out and it can be replaced by some other token. Simple. Okay. Now, finally, to wrap up this entire discussion that we did as to why is the Indian crypto index as such required? Is it really important or not? If you ask me a question that, Rachana, how much returns has crypto as an asset class given in the last 10 years? My answer will be that Bitcoin has given an annualized returns of 124%. Okay. Now, you will be like, wow, 124%. Right, but wait. One thing is that you asked me the performance of overall crypto market, and my answer was Bitcoin has given 124% CAGR over last 10 years. Now you might be like, Rachana, why didn't you tell us the value of overall index, that Indian crypto index went up by XYZ%? I didn't have an answer for that. Why? Because till date we didn't have any rupee based crypto index, right? So that is the reason why I believe that in spite of the growing crypto base of investors, investors as well as the media, we were forced to analyze US dollar based crypto indices, and that is the reason why I believe again Create has solved a big problem, so that now we can rely on rupee based crypto index, and this index surely can help us in our investment decisions and in our asset allocation decisions. I'm sure this Create index has got you excited. So if you want to know more about Create, you can just check out this website. I'm also going to pin the link of this in the description box. Plus, you can also check that on the I button. This also has something known as a 4 p.m. daily fix. But what is that all about? You can also check out in the FAQs. This will also tell you about the selection of index constituents. So, many points. Everything is given in the FAQs, including what is the index all about, what are the constituents. I talked about the 4 p.m. fix. What is this? Everything you can find out in the FAQs. So, this is a very good platform to DYOR on the Create. Wow. We discussed so many points in this video. We talked about the different types of asset classes. We talked about what were the different returns that these asset classes were generating. We talked about the concept of real return, and then we moved on to the concept of a risk return pyramid. Followed by we talked about the types of investors, and also we understood what could be a typical asset allocation based on your risk profile. In that, we talked about cryptos, and then we moved on to understanding something more about cryptos and a very unique point that CoinSwitch Kuber has come up with, that was nothing but the Create index. Now that you know so much points about cryptos, we must understand what are some best practices while you start your investment journey in cryptos. We have to be aware of the fact that kitna bhi bolenge, it's an evolving asset class, and that is why regulations are still on the go. All regulations are not in place right now, and that is the reason why whatever type of investor you are, maybe you are a risk averse person or a medium risk taker or an aggressive investor, any type of investor you are, you must ensure that you are investing in cryptos slowly and steadily. But how do you do that? You can do that with the SIP feature that CoinSwitch Kuber has. While you start your investment journey, an option will be given whether you want to go ahead with a one-time buy or an SIP, but I would surely suggest that you go ahead with the SIP feature. So with this SIP feature, one more thing as a best practice, you should know that whenever you are investing in any token or in any coin, you should do your own research, have a thorough knowledge of what you are investing, and then only take the final decision. Third point, I would want you all to tell you that when you do your analysis and assume that you select a specific crypto for investment, Don't put all your money in one single crypto. It's always said, right, that don't put all your eggs in one basket. Similarly, you should be spreading out your money in different cryptos. So if you want to know which are the top 5 cryptos for 2022, you can click here. And if you want to know what's going on in cryptos in 2022, you can click here. So if you have liked the video, don't forget to share it with your friends. Till then, take care. Jai Hind and bye.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.